Good day, ladies and gentlemen. Welcome to Somany Ceramic Limited's Q2 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the management's opening remarks. Should you need assistance during the call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Naveen Agarwal, Head Institutional Equities at SKP Securities Limited. Thank you, and over to you, sir.
Good afternoon, ladies and gentlemen. It's my pleasure to welcome you on behalf of Somany Ceramics Limited and SKP Securities to this financial results conference call. We have with us Mr. Abhishek Somany, MD and CEO, Mr. Srivastava Somany, Head Pathway, Mr. Sailesh Raj Kedawat, CFO, and Mr. Kumar Sunit, Head Strategy and IR. We'll have the opening remarks from Mr. Somany followed by Q&A session. Thank you, and over to you, Mr. Somany.
Thank you so much. Welcome, ladies and gentlemen, and happy Diwali once again. This quarter, we've grown by about 3.6%. This is after a major impact in the northern territory, which you all know was virtually underwater. Most of Uttarakhand, Uttaranchal, J&K was underwater. Even after that, we've been able to grow at 3.6%, considering north consists of approximately 46-47% of our tile sales. So from that point of view, it's been a fairly decent quarter. However, the capacity utilization still has been low. It's been at about 75% this quarter. That is also due to an outage in the Kasar plant, in our northern plant. We had mentioned it earlier in August to SEBI and all to the exchanges that we had an outage. There was almost a 20-25 day outage in the Bhavana pipeline. Due to the Bhavana pipeline, that's about 70-80 kilometers from the plant. It's a GAIL pipeline which had a leakage, due to which the gas was stopped overnight. We did everything we could to make sure the gas gets restored, and it has got restored on the 20th of September with a 20-25 day outage. This did impact some amount of capacity utilization, obviously, but also impacted mostly on the EBITDA level. Approximately a 1.2-1.25% plus EBITDA has got affected. Having said that, now let's come to the EBITDA. Our EBITDA stands H1 at 7.9 and also Q2 at 7.9, which is down from 8.5. This is more owing to the issue which we had with the Kasar plant. Had it not been, then it would have been that much better. So we would have actually performed better from last year Q2 and also last year H1. So this is an aberration. As far as GAIL is concerned, this is the first time it's happened in their history. So it's absolutely a freak condition. We do have insurance on this, and therefore we are now have submitted all the papers possible for the insurance, and we are hoping that with the best outcome, and this would flow back into the P&L at a later date. Gross margins did decline, which I just mentioned. Margins also got impacted a little bit. Capacity utilization, like I've spoken, has partially been affected due to this. Although it's not entirely due to this, there has been also a muted demand overall in the northern area, like I said, and across the country. Our JVs are still in losses. One particular JV, which is Max, is still in losses, where we have taken corrective action, and you will start seeing considerable gains from this from Q4 onwards. Vintage was another JV of ours, where we had a shutdown of 40 days. We have changed the product mix over there, which has now made the plant fungible between some other formats of tiles and some other kinds of tiles. So this particular plant was producing only double charge vitrified tiles, which was basically going to the government. Government spends being slow, this got affected. But having said that, we've changed product mix over there, and this is 100% back online from this quarter onwards. Other than that, our ceramic sale was down 1%, whereas the GVT sale has gone up by 1%. So that is very heartening that GVT keeps going up. And like I mentioned in my earlier call, the GVT sales would be 50% plus in the next 12 to 18 months. The gas pricing has been flat completely flat. There has been no changes in the gas pricing across the different locations. Brand spends have been at the same 2% in Q2. Working capital increased marginally by 1 day as compared to last year. However, our receivables have gone down further. So the balance sheet is well under check, and we are extremely cognizant of the fact that we do not want to have any open credits in the market. So we're very careful of that. The net dealer addition has been about 119 in the H1. That takes our total to approximately 3,000 dealers and takes our exclusive showroom count to about 520 in the Q2. We do not want to change our guidance. We're still hoping for a single digit, mid to high single digit growth in this year. Like I said, we did 3.6%. That is when North did really perform. So we're hoping that with this increased sales in the H2, that would further improve the capacity utilization, and that would obviously relate to a EBITDA margin improvement for at least 150 bits from here. These are the highlights for the H1 and Q2. I also one more point. The total debt in the JVs has again gone down. It's at 257 crores, out of which the two JVs constitutes of 75% of the loan, which is approximately 105 and 85 crore rupees between Sudha and Max. Other than that, Somany Ceramics standalone does not have any debt, and this quarter again we did not use any of our fund-based limits. So no working capital was used again for this quarter, and we have made repayments of approximately 18 crore rupees in H1. So balance sheet keeps getting stronger. We're just hoping for sales to pick up across, which will further increase the capacity utilization and obviously increase the margins quite significantly. This is my highlights. Now I open the floor to Q&A, please. Thank you so much.
Sure. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star and 1. Ladies and gentlemen, you may press star and 1 to join the question queue. The first question is from Keshav Lahoti from HDFC Securities. Please go ahead. First question is from Keshav Lahoti from HDFC Securities. Please go ahead with the question.
Should I go ahead?
Yes, sir. Please go ahead.
Hello.
Yes, please.
So my first question is on demand side. So firstly, have you seen any, pickup in demand in October? How is the demand outlook? And secondly, we have, said we have taken some price hike in July. How has that played out? And we plan to take more hikes or?
Right.
So you said you have taken some price hike in July in last call.
Price hikes have been retained. We have been able to retain the price hike. In fact, we're looking, if the demand picks up, we'll probably take another price hike in this quarter or maybe early next quarter. As far as the demand side is concerned, in October, considering that was Diwali and Chhath Puja, we have been able to grow with a very, very small amount in October, which is a great news because now it's a clean run for the next 5 months of the year. So I think demand to that extent, considering we've grown at 3.6% last quarter, considering North just did not perform because of rains, I think demand is coming back slowly and steadily.
Okay, got it. And what was the quantum of price hike on blended basis?
What was the quantum of hike?
How much you plan to take more hike?
Around 1.5%.
About 1% and a point, 1.5%.
1.5%, right?
Yeah.
Okay. Got it. And tell me one thing, as you highlighted in the call, so because of Qatar plant, the margin was impacted by, 120 basis. That is talking on consolidated basis.
No, the Qatar stoppage contributed approximately to 1.2% plus of EBITDA for the quarter because of the outage of 20 days. That's what I mentioned.
Okay, because of one the reason was...
So my margin would have been better by 1 to 1.2% or more if it had not been for the 20-day complete shutdown of the plant.
Got it. So just last question from my side. How is the margin guidance? Will you hold the same because of this? That's not even.
I can't hear you. I'm sorry. I can't hear you.
So EBITDA margin guidance, you have given an improvement of 100 to 150 bits for FY26. Does that hold, or will you like to limit?
No, I would hold that.
Okay, that is good to hear. Okay, thank you. That's it.
Thank you. The next question is from Neha Talreja from Nuvama Wealth. Please go ahead.
Hi, good evening, team. The way you mentioned on the domestic demand, could you give us some flavor on the export demand?
Sorry?
The
Export
way you
demand?
mentioned on the domestic demand, how is export demand shaping up? Because that could, tell us about how much, Morbi guys are focusing on the domestic market.
Sure. So export for us was down, in fact, by 6 crores because some orders left first week of October instead of end of September because the vessel is not available. So it was down by 6 crores, but otherwise our export is hardly anything. It's literally 2% of revenues. It really doesn't matter. But overall for the industry, it's good news. It's picked up by approximately 7%, which means that we are en route to maybe 19 to 20,000 crores this year versus about 17,500 crores last year. So overall export for 5 months, the data which we have for 5 months and not 6, the 5-month data shows that it's picked up by 7%.
Understood. And what will be the utilization of our max plant, and at which level do we, kind of start making money here?
Max plant is only at 50%, and we are hoping by quarter 4 it will be at 75 to 80%. We're not hoping, we're very sure that it will be 75 to 80%. Which means it stops bleeding money. It will not lose money, but it will not make money. It will start making money from next year, but at least we will arrest losses.
Understood. So that's it from my end. All the best.
Thank you.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. The next question is from Madhur Rathi from Counter Cyclical Investments. Please go ahead.
Sir, I'm trying to understand that there is a significant divergence between our standalone and consolidated numbers, mostly due to depreciation and interest, but even otherwise, our even working capital days, there is a significant difference. So basically, how should the investors see the company in standalone or consol numbers should be taken?
Well, obviously, it's one company. Standalone, we've done much better than earlier quarter. Consol, it has been dragged because of the 2 JVs, but a company is always looked at as consol. So I would like Shailesh to answer that. However, the one thing before he starts answering, I would say that we have grown on a consol level by 3.6%, plus our EBITDA would have been at least 1.2% better had we not had this freakish accident, which is at Gale side and nothing to do with us. Go ahead, Shailesh, you can answer this.
So Madhur, if you look at our standalone and console numbers, you're seeing difference not in sales, but there is a difference in the profitability. Like there are 2 or 3 joint ventures which Abhishek mentioned earlier, which has not performed during this quarter. Max and Vintage was a dragger only for this quarter, but otherwise it's on track now. The depreciation number difference between standalone and console is accounting. You have to understand that console also accumulates the joint ventures which are manufacturing joint ventures. So all their interest, depreciation, operating costs, when you do console, it comes into the financials.
Sir, now secondly, sir, what is the trend in gas prices going forward? And, sir, how's the demand looking? Is the industry out of the woods or some more pain is left on the demand side?
I think the industry is out of the woods, although it's going to be a slow turn. It's not going to be a V-shape improvement, but it's out of the woods. Exports have started picking up. Modi, the amount of evasion they can do is already happening. People, they're really hurting over there. No new capacity is going to be added in the next 24 months for sure. And as far as gas pricing is concerned, it remains to be flat. I don't think there are any surprises in the future with most of the wars also getting settled or kind of being at the same level as what it was a couple of quarters ago. So I don't see any surprises with the gas pricing. I think it will largely remain flat.
So, for Somany, what kind of CapEx can we expect for the next 1 or 2 years?
I don't have any CapEx for the next 12 to 18 months. All the CapEx has been done, so we will see the debt levels coming down and profitability going up.
And sir, just a final question. So is it fair to assume that considering the 1.2% from the Kasar plant and the 150 basis point improvement, we can do upwards of 10% EBITDA margin for H2?
Yes, correct. Your understanding is absolutely correct.
Okay, sir. Sir, thank you so much and all the best.
Thank you.
Thank you. Participants who wish to ask questions, please press star and 1. Next question is from Pranav Mehta from Equirus Securities. Please go ahead.
Sir, can you hear me?
No, Pranav, it's not very clear.
Can you hear me now?
Not really, but try. Go ahead. Pranav can't hear you. It's garbled.
Pranav, if you're in a indoor area, I request you to move to an area with network. Your voice is breaking. Pranav, we request you to rejoin the queue. Maybe disconnect and call back.
Hello, can you hear me now?
Yes, much better. Please go ahead.
Yes, sure. Yeah. Sir, so just
I'm sorry, Pranav. I request you to call back. Your voice is not clear again. Thank you. We'll move to the next question. The next question is from Ashutosh Khetan from AMSEC. Please go ahead.
Hi, sir. I just wanted to ask what's the contribution of the ceramics, PVT and GVT for this quarter?
Ceramics is at 33%, PVT is 26%, and GVT is 41%. If I take you to levels of FY24, 2 years ago, ceramics was 36%. So it is down by 3%. GVT was 34%, it's up by 7%.
Okay, sir. Got it. Thank you.
Thank you. Participants who wish to ask questions, please press star and 1. A reminder to participants that you may press star and 1 to join the question queue. The next question is from Madhur Rathi from Counter Cyclical Investments. Please go ahead.
Sir, so our stock price is at a 10-year level at which it was back in 10 years back, and the company is also, at least on standalone basis, is totally debt-free. Sir, so any plans to do another share buyback and extinguish our shares so that the future growth can get divided on a smaller base of shares?
No, currently we did a fairly large buyback, and we also had a large expansion of Max plant. Therefore, currently we have no plans of a buyback. But in future, like I said, in the next 12 to 18 months, maybe 24 months, we don't have any significant capex, and we do believe that our treasury will keep coming back after all the investments which we've already made. We will then decide whether to do a share buyback or reward shareholders in some other way. But yes, the principle will be to not if there is no expansion, then we would reward the shareholders.
Sure, sir. And sir, in your best judgment, sir, when can we again see double-digit margins, which post-COVID hasn't been the case for a long time?
Absolutely. I think in the next couple of quarters, you'll start seeing the double-digit margins.
Great, sir. Thank you very much.
Thank you.
Thank you. The next question is from Yash Tawani from Amara Capital. Please go ahead.
Yeah, hi. Just want to understand what is the margin difference in terms of the ceramics, the PVT and the GVT that we have?
That's a very complex question because within ceramics we have a fairly large differential in margin in terms of contribution, and so is the PVT. But to answer your question, PVT is the lowest, and then is ceramic, and the highest is GVT. Within GVT also there's a lower range of GVT and a very high range of GVT. So the spectrum in the GVT is much, much wider. The spectrum in the ceramics is slightly smaller, and PVT is hardly a spectrum. So it starts at one point and ends very quickly in a couple of rupees above. So PVT is the lowest contributor, and then ceramics, and then GVT.
Okay. And one more thing, a follow-up on it, that what are the targets that we see over the next 2-3 years in terms of the total ceramics, in terms of the total sale for these things? Let's say the GVT today sits at 41, then what is the vision that we have to take it over the next 2-3 years?
Well, within the next year, it should be at 50%.
Okay.
Yeah.
Okay, got it. All right, yeah.
Thank you. Next question is from Ashwat from Aryan Capital. Please go ahead. Ashwat from Aryan Capital, you may go ahead with your question.
Thank you for the opportunity. So I just wanted to ask, our volumes have been relatively flat on a quarterly basis. So wanted to know what kind of improvement are we expecting on volumes? That would be my first question.
Well, amongst the largest players, I think we've at about 3.6%, considering North is a very heavy sales territory for us, and North has been battered by rains. So I think volume also we are, like I said, I'm maintaining mid to high single digits for this year.
And sir, on sanitary ware, how much contribution do we expect on top line from here on, since our realization has been pretty decent, utilization has been pretty decent here. So where do we see this on percentage basis?
Sanitary ware, we are looking at in the next 1 year, approximately 15-16% of our revenue will be sanitary ware for the bathware. We are about 12%, will be probably 15% of revenue in the next 2 years.
Got it. Thank you, sir.
Thank you.
Thank you. Next question is from Keshav Lahoti from HDFC Securities. Please go ahead.
Hi, thank you for the follow-ups. How much has been the max loss for this quarter?
That is max loss for the quarter.
Max loss is around 7.5 crores.
Okay. Tell me one thing, whatever the price hike you are talking, so is it like industry have taken a hike, or is it more like Somany is going and taking a hike irrespective of industry, Somany will take a hike? How should we read it? Because what we
branded players took a hike. Branded players took a hike, and again the branded players will only take a hike. Morbi doesn't take a hike; they just increase their duty evasion. Their hike is do more chori.
Understood. Got it. And how has been the North volume year-on-year in Q2 as well as in H1?
North volume, sorry?
North volume decline in Q2 and how this number...
Q2 North volume has been battered. It's grown, but it's not grown as much as it would have normally. But I'm not too worried about North because everybody in the North has had the same issue because of rain. So this will come back this quarter.
Okay. So as you were saying, North volume have grown in Q2, your volume is flat, so possibly other regions are not performing good. How should
No,
we
other
read it?
regions, in fact, South has performed better than what it was performing in the last 3-4 quarters.
So, but your volume is flat. If North have grown, means South have possibly declined? How should we read it? Which region is...
North did not grow.
Okay.
South grew. Therefore, we've grown at 3.6%. Had not grown, we would have been upwards of 5%.
Got it. Understood. And last question from my side, how you maintain your sanitary, guidance of double-digit growth? And lastly, how has been the sanitary performance in this quarter?
Sanitary performance has been how much? You can talk.
So sanitary performance, hi Shiva. The sanitary performance been around 9.2% this quarter, and historically the next 2 quarters do go better. So we are still looking at low double-digit growth in the sanitary bathware segment for the year.
Okay. Thank you, sir. That's it.
Thank you.
Thank you. The next question is from Karan from AMSEC. Please go ahead.
Hi, thanks for the opportunity. Am I audible?
Yes, please.
Yeah, so just wanted a few data points, sales number for sanitaryware, faucets, adhesive, and how do we see these businesses shaping in next 2 years, and the margin expansion scope?
So all three businesses have grown, like he just said, my brother just said, about 9.5% of our bathware division. The adhesive division is very small, so it really doesn't matter in percentage terms, but it's growing well. What I can say is that overall in the next 2 years, these two businesses, which is the other than tile businesses, will be more than 20% of our total revenue. So
and can you split the sanitaryware and faucet?
You want to split the sanitaryware and faucet?
Yeah. And how do we see margins for this category? Because we believe it's a slightly premium category, and we were doing our best to see improved margins. So how are we there?
Well, sanitaryware is approximately 60% of revenue, and bath fittings is about 40% of revenue of the total revenue of bathware. And margins are slightly better, not significantly better, but slightly better, because we are still one of the challenger players. So we have to do that much more effort in terms of marketing, sales, and branding, because most people don't know us as a sanitaryware brand, like they don't know a Cera or a Hindware or a Parryware like a tile brand. They think of them as a sanitaryware brand, they think of us as a tile brand. So we're doing that extra bit to make ourselves more visible and more known in the sanitaryware sector. But overall, it has better margins than tiles. The split I've just given you, 60-40 currently, between sanitaryware and bath fitting, and going forward, this will go to 50-50 between sanitaryware and bath fitting.
Sir, I guess it from my thank you.
Thank you.
Thank you. Next question is from Ashwath from Aryan Capital. Please go ahead.
Yeah, thank you. So if you could just help us with FY27 top line guidance and also on margins.
FY27, let 26 finish first.
Yes, I know it's quite distant from today, so if you could just...
I think looking at the market, we're looking at high single digits even for next year, and margins, it will improve another 150 basis points from whatever we exit. So double-digit margins this year if the capacity goes up, and then another 150 bits from there for FY27.
Got it, sir. And could you help us with the project retail split if you could guide us on the same?
Sorry, I lost you there. Could you repeat, please?
The project split, the percentage of projects that you expect thereon.
Project split, right. Approximately 15 to 17% of our revenue comes from projects. 3% comes from 2.5-3% comes from export, and the rest is retail.
Do we expect similar lines going ahead?
Yes, I believe projects will go up a little bit, about 1% or 2%. It should become about 18-19%, because real estate again is doing well, and their cycle of buying tiles will start happening now. So I do believe that the projects will become slightly larger. So I think next year would be about 75 to 77% retail, 2.5% export will remain, and the project will improve by about 3-4%.
Okay, sir. Got it. And my last question would be, what was the gas cost for the quarter? I'm sorry if I missed it.
Gas is absolutely flat. There's no difference in the gas price.
Okay. Yeah. Thank you so much for answering.
Thank you. Next question is from Udit Gajiwala from Yes Securities. Please go ahead.
Yeah. Hi, sir. Thank you for taking my question. Since you are holding up the guidance for the volume growth, I mean, is that the resultant that you are seeing that even the margins will come up to double digit, or it will be more like the product mix change that you are expecting Max plant to contribute? So what happens if, your volumes, if you're not able to deliver, where do we see the margins then?
All three of it will be a host of matters. Of course, capacity utilization makes a lot of difference. With that, some amount of rejigging of, we continuously are value adding and going towards more of a value added mix. But currently, this double digit margin very largely will come from capacity utilization going up from the 75 to 85-87% levels and more.
So at the current product mix, if the current utilization goes beyond 85, then double digit margins are doable.
Yeah,
At the current
it'll add about 150, 120, 30 bips automatically at current margins.
Okay. So since, I mean, one more clarification, since this is just due to operating leverage, there is no role of price hikes. So the price hikes, if you all are able to take and pass it on, that could be more incremental. Is that fair understanding correct?
Yes, correct. But there is no price hike currently for this quarter. Probably end of the quarter or early next quarter, we would probably think of that.
Fair enough, sir. Thank you for the clarification. Thanks.
Thank you. Next question is from Shreya Garg from Yashvi Securities. Please go ahead.
Hello. Thank you for taking my question. Am I audible?
Yes, please go ahead. Yes, please go ahead, Shreya.
Yes. So, I'd like to take your views on my understanding about the industry. As we know, the building material industry moves at about a lag of 2 to 3 years post the real estate boom. And this was supposed to be coming in FY25 and 26 for us. But the entire listed industry missed out on this opportunity. So, would it be correct to assume that the next volume or the demand boost should be coming for us in the next real estate cycle?
No, I don't think we missed the opportunity at all. Tiles is the last item which goes in the building. In fact, our cycle is just about beginning.
Okay, but we've seen volumes to be flat for the entire 25 and 26, even for the top listed player. And both, the entire industry have been giving a high guidance for 25, 26, 27. But we've not seen that happen.
Yeah, that's obviously it's been delayed, but this cycle is just about starting. There has been some volume which has been taken by local players of the real estate because the price differential is so substantial with poor quality and high level of tax evasion. That has taken up a little bit of the sheen from our growth, but that seems to come back because export, like I mentioned in the call, maybe you weren't there on the call, but export's gone up by 7%, which means that a lot of the Morbi players will again start re-exporting, and a lot of their focus will move towards export and leave that much more space for us in the domestic industry. But I'm pretty sure that this growth is still to come for us in the next 12 to 18 months, maybe 24 months. We will look at single digits and high single digit growth levels very soon.
Okay, thank you.
Thank you.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to ask questions. Next question is from Madhur Rathi from Counter Cyclical Investments. Please go ahead.
Sir, I'm trying to understand that if we operate at full capacity utilization across our subsidiaries and JVs, so what kind of maximum revenue we can generate per annum?
So I think your question is towards how much capacity I have. So we can do about 500 to 600 crore rupees more of tiles, and we can do another, how much of sanitaryware between the two? 100 in the two, between sanitaryware and bath fittings. So another 100 crore rupees in current capacity. In current capacity? About another 100 crore rupees between sanitaryware and bath fittings.
So basically 600 crore more than what we are already doing.
Yeah, between 5 and 600 crores.
So since FY15, our net block has increased from around 250 crore to 1,000 crores. But sir, it seems that our revenue that time was 1,500 crore. And even if we add like 500-600 crore on our existing revenue base of 2,700 crore, it will be like 3,300 crore. So it's by and large only doubling, whereas the net block has gone up 4 times.
17 is off.
I would let that.
First of all, 15 and the current is not comparable because 15 there was a different accounting methodology where JV blocks were not getting consolidated into the consolidated numbers. From 17 when India started, we started consolidating the block. Just to answer the question, I think we did investment of around 500 crores over last 2.5, 3 years in fixed assets. Right? And there's a depreciation charge also which has come on all those assets. So depreciation is around 50 crores per year. So 150 crores is reduced from there. You'll have to look at 16 numbers or our recasted 16 balance sheet or 17 balance sheet to look at the correct block number.
Right, sir. Understood. And sir, what percentage of our revenue are we spending on advertisement and sale promotion?
It was at about 2.9% at a smaller revenue. Now it's about 2.3 to 2.5%.
Sir, and going forward, we hope to maintain this level?
Absolutely.
Okay. Now, sir, regarding the Morbi players that you were alluding to, that the duty evasion, sir, so I understand over the past decade, 2 major Morbi players have broken into the retail segment in India, Simpolo and Varmora. Sir, so I mean, are these players evading GST? Sir, because I think they are too big to do that.
These are better players out of Morbi. It's these out of 800 players, there are 4 or 5 better players out of Morbi. I do not mean these players. I mean the rest of the Morbi players. Which are the smaller ones between the 100 and 500 crore mark.
Sir, so it was expected that post GST this sort of thing will basically go down, but instead, sir, so is it because the gas input GST is not available on gas?
It's not only that, it's a question of how they are evading is they misdeclare their quality. There is a difference between first quality and second quality. We make 95% first quality. They probably make nothing more than 20% first quality. Anyway, this is a question which may be offline.
Right, sir. Sir, so that's all. Thank you very much. Best of luck.
Thank you. Participants who wish to ask questions, please press star and 1. Well, that was the last question in queue. As there are no further questions, I would now like to hand the conference over to Mr. Somany for closing comments.
Thank you so much, ladies and gentlemen, for joining the H1 and Q2 results. We hope for better times and much better growth for the H2. Look forward to the next conference call after Q3 results. Thank you so much.
Thank you very much. On behalf of SKP Securities Limited, that concludes the conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.